Welcome to Bears in Exile. Today is October 1st, and this is our update to Vegas Baby. Be looking at Boyd, MGM, WYNN, and LVS. Okay, it's been a little while since we touched on Vegas Baby. It was back here. We said that Boyd was the weakest, and let's see how it's done. Well, it was in the fives. We ended on Friday at 490. We exceeded the floor by 1 penny. So not too big of a break, but a break nonetheless. We closed Friday below the lower price consensus level, very bearish. We have the short-term moving averages pointing down, middle Bollinger Band above the short-term moving averages, bearish bar in full effect. Downtick on the CCI, downtick on both the stochastics, they are getting sort of low. Downtick on the RSI, downtick on the histogram, downtick on the MACD, downtick on the 14-day RSI moving average, has lots of room to move. This looks bad. Now if we look at black box number 1, we can see that we are bumping into the lower of the minor trend. Below us are the major trend just above $4 and the extreme trend just above $3. That is very ugly if we were to go down. Now, we have come into contact with the lower price consensus, the lower minor trend. If we were to bounce off it and go to the top, which it normally does ping pong around inside, we are looking just slightly above 570. Above that we have the major trend just below $6, but we have the extreme trend running into our current zone, which is not a good sign. So, very ugly, and look for divergences. Do we have any? You could say we have a minor one in the CCI. We do not have one in the stochastic. We do have a small one in the RSI. We do have a very, very slight one in the histogram. So at least it has some hope, but still a very ugly chart. MGM. This one's been kind of crazy because we looked at it a while back, and right after that it had buy recommendation after buy recommendation for days. We had the CEO on CNBC saying, oh, everything's fine, and because we were saying that this one was ugly. And once you know it, that all that stuff did help keep it up, but with all of that, it still did not do much of a dent to MGM. And the ugliness that we were predicting did finally come through on Friday. We closed below the lower price consensus level. We have not broken the floor, proper English, and but it is very close. Short-term moving averages spreading out to the downside, middle Bollinger Band above them, not a good sign, and downtick on the CCI getting pretty low, stochastics getting low, but not at the bottom yet. 14-day RSI moving average hooking over, downtick on the RSI, downtick on the histogram, downtick on the MACD, not an attractive chart. 60-minute. Well, we have the 14-day RSI moving average very low. When this gets a hook, it could be a really good move. Stochastics getting low. I'm assuming that they are going to meet up with the 14-day RSI moving average and then turn up at some point in the future. Certainly we have divergence in the stochastics, which could be broken. We have divergence in the CCI. We have divergence in the histogram. We have divergence in the RSI. So there is some hope, and with all those buy recommendations, I think that once it does hit a bottom, it will have a pretty rapid ascent to wherever it's going. Looking at black box number 1, you can see that we have left the minor trend. The extreme trend is coming down into it. If we were to get a bump, we would see 1050, which is entirely possible. And of course we have the 200-day moving average way up here at 1350. We also have the major trend sweeping down below us, which is very unusual and not a good sign. Beyond that, if we get the big move lower, if the market tanks, we take out the floor, we are looking at about 720. Entirely possible. And going on to WYNN. You know, this was one of our stronger of the casinos by a very good margin. We were above the price consensus levels. We had the middle Bollinger Band below the short-term moving averages. We were above the 200-day moving average. You know, not bad. We had the 14-day RSI moving average going up. And then something happened, and you know, these worries about China, and it just cratered. And we did mention at the time we did not have a formed bullish bar, but it just it blew through it, blew through the upper, major, and on Friday and Thursday, the lower price consensus levels. We took out the floor. And 14-day RSI moving average now pointing down, along with the stochastics, which are starting to get low. CCI pointing down, it's low. RSI pointing down, low. Down on the histogram, down on the MACD. Very ugly. Still, going from the 160 area down to the 115 area seems extremely overdone, especially with a leadership stock like WYNN. So if we look at black box number 1, this is very interesting. This is why we use the black boxes. We had the minor trend turn down, but we left that violently. We went through the minor trend, went through the major trend, and are poking at the extreme trend down here just above 110. It would appear to me, based upon just the position and the price and the position of the trends, that we should have a bounce at some point very soon up to the top line of one of these trends. That would be either at 137 or 128 or or 159, but I do think that the 200-day moving average does have a part to play in that, so the 130 area makes a lot more sense to me. Looking for divergences. You would think that we would have some. Do have one in the CCI. We do have one in the stochastics. We do have one in the RSI. We do have one in the histogram. These are all looking back a pretty good ways. So I do believe that there is going to be a bounce in WYNN very shortly. But we cannot discount the fact that we are below the price consensus level and we are below the previous floor. That is very, very bearish. So going up, retesting a price consensus level and then failing would seem to be entirely appropriate. But once we have the 14-day RSI moving average and oversold, and we have the Stochastics ready to move up in concert with it. I do believe that we'll be ready for the real move up. And that could be a week away, 2 weeks away, something like that, but at some point it'll be coming. LVS, which was stronger than WYNN just because of the formation of the bullish bar, and because at the time we did not have any price consensus levels above us, which WYNN did. We said that this one was very, very strong. And we got to that point in time where everyone freaked out and it just collapsed. Notice that we have gone through the upper price consensus level, the major price consensus level, the lower price consensus level. Ooh, I can't talk. We have the middle Bollinger Band above the short-term moving averages. Short-term moving averages do have some wobble in them. They don't have noticeable excessive separation. We have not taken out the previous floor, and we have not passed through the lower price consensus level from 2 months ago. So LVS does have some better attributes to associate with it at this time. But that isn't to say that it is all wine and roses. We have more room on the 14-day RSI moving average to head down rather than as opposed to WYNN. Do have the stochastics getting low, but still have a little bit of room to move. RSI getting oversold. MACD ticking down, along with the histogram, and CCI ticking down. Looking at black box number 1, we can see that it is very similar to WYNN in that we are now below the 200-day moving average. We have left the minor trend, we have left the major trend, and coming in on the extreme trend just above 37. And if we were to get a bounce here, we would be looking at the 43 area, and if it has a total reversal, just above 51, and 53.5. So the price trends actually are more favorable here than they are with WYNN. But WYNN is closer to the extreme trend, and once you hit that, you really should have a violent reaction. But if the market does crater, certainly this can hit it and go through it, but I don't expect it to hang around at that point for too long. Once we have, just like everything else, once we have the 14-day RSI moving average get to wherever it's going to stop and hook around, when it meets up with the stochastics and goes on its merry way up, we can expect a really good move to the upside. But it just doesn't look like that's about to happen yet. Having a test of the floor and bouncing off of it will be an extremely good indication, but we have a couple of dollars to go before that point. And if it breaks it, of course, all bets are off. Going to the 60-minute, looking for divergences. Yes, we have one in the CCI. Yes, we have one in the stochastics, although it could be broken. It's not too far away from breaking it. We have extremely minor one in the RSI. We do have one in the histogram. So the divergences are not as strong as WYNN, but still, there's something there to look for. And that's going to be it. What a turn of events with the casino stocks, especially the leaders. Just looking for that market turn, looking for that turn on the 14-day RSI moving average, and we'll be good to go. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.